Boom. We are alive, ladies and gentlemen. Thank you for joining us today. We have Philip Swift from Look Into Bitcoin. We did a podcast a little while ago, Jesus. Philip Swift in one word. That's what that was. And the reason why he doesn't have his camera on is because he's too sexy. And I don't want him to overpower my sexiness. So it's just me on camera today. And we're going to, I already got the charts open. So it's great to have you back on. A lot of people that like my channel know that I don't really like, I've tried to ignore almost everybody else in the ecosystem. And what I liked about our last conversation was just let's call it banter, like technical and fundamental banter. So great to have you back on the show. How you doing, Philip?
I am doing great. Thanks for having me back. I enjoyed our last catch up too. So it's great to be back here. And looking forward to just chatting about Bitcoin in the markets. It's going to be good.
So, I think the last time we spoke was around November. Bitcoin was, I think, around $19,000 to $27,000 is kind of that previous trading range. Yeah. And now, ultimately, I'm still quite bullish, and I have my own anecdotal reasons for it as well as technicals. But take us through where your feelings of the market are right now, and yeah, we'll start with some conjecture there.
Sure, we'll do. So I mean, kind of the TLDR from where I'm at is I'm also pretty bullish. But I'm going to talk through why I am thinking we are not about to enter a bear market right now. And I'll look at some technical reasons, but also look at some macro stuff as well. So looking at some of the charts from my websites in terms of on-chain analysis and also market cycle analysis. And for me, I do think we are about to head in potentially into quite an aggressive leg up, not that dissimilar to the last time we spoke, actually, when we were around here back in November last year. And I do think that this short-term pullback we've had the last few days is potentially just a bit of a shakeout before we have the next leg up, like we had here on this candle here. So if I just run through a few things, but just shout out as I go, and we can discuss whatever is on your mind as well as mine. But first off, just in case for anyone who doesn't know me, I should probably just quickly say, this is me on Twitter. I'm at Positive Crypto, so you can check me out there. And I work on two websites. One of them is called Look Into Bitcoin, and it is just really like a resource for people who are trying to look into Bitcoin for the first time, and they can find out the basics about Bitcoin in the learning section. But there's also loads of free live charts that I just put out there. There's no paywall or anything like that. You can just go and check out all of the live charts, some of which I'll cover today, and you can subscribe if you want more stuff. And then I also work on this other project, Decent Trader, which is more for traders and crypto generally, and has indicators like this one here, which I'm looking at, called the Predator, which for me is like my go-to for like technical kind of charting tools, because it's a trend-based tool that kind of shows you whether Bitcoin is trending up when it's green, or whether actually you need to be a bit careful and things turn red, things aren't looking too hot, and actually you want to be getting out of the market. And it pretty much did well here. I'm on the 3-day chart here, did well up here, and pretty much told us to go back long on this candle here back in July. And it's actually been green until we got up to this resistance level here at around 50K and got rejected off that. And right now we're sort of like the lighter green, which is still to be long, but not as bullish as we were. So things still look pretty good on sort of those time frames. And if I just zoom in a little bit here, this is looking on the daily time frame. We got rejected off this level, this zone here, and I think that was important for a couple of reasons. First reason, it was the big round number of 50K, but also secondly, it was the point of the major breakdown back in the summer. So we were ranging at this level here, and then once we broke below the 128-day moving average, that's when we capitulated down. And I think this was an important level to get across, and we had a little fake out, but since then we've come back and have now retested the 128-day moving average. Now, if you're wondering why I'm talking about the 128-day moving average, that might seem a little bit of a random number. It's pretty much the 20-week moving average. So lots of traders look at the 20-week moving average, but if we go to last cycle, you'll see that in a bull market for Bitcoin, it can capture the dips quite nicely. So I'm just zooming in here. You can see 1, 2, 3, 4, 5 times back in 2017.
Yeah, this is in the traditional market. When I first started studying, you'd see the 21-week moving average as a kind of consistent testing point for the beginning of the bull market.
Correct, exactly. So we kind of see that here on Bitcoin, and it's just interesting to note that actually both Bitcoin and Ethereum have bounced pretty hard off their 128-day moving average today. So we are getting a very bullish reaction. Whether this is the exact bottom or not is yet to be seen. I'm not going to get into the lower timeframes for this discussion today, but it is interesting to note that we are having such a strong reaction off that level when we are also showing negative funding rates as well. So these are the derivative funding rates. This is off BitMEX, which is obviously not one of the big exchanges anymore, but it's still a pretty good proxy. And you can see that we are.
Yeah, I just see it in my FTX account every time I see the funding rates super jacked. I'm like, oh, we're near an intermediary top.
Yeah, exactly right, exactly. And we saw that over the sort of Q1, Q2 when we were up above 60K. But interesting to note that we are negative now. So that's looking pretty decent for a reaction, and we do seem to be getting a hell of a reaction today. We must be up like what, 7% today, are we? Something like that. Yeah, six and a bit. So this is looking pretty good so far. As I say, I'm not saying that's definitely the bottom, but it's a nice reaction so far. But
Sorry, I was looking. There's a beautiful little pocket there, right around the 38 to 42 on the VPVR. And it's basically, to me, it looks like the top of the previous trading range. So this should this should hold as a strong level of support, has been my intuition. I don't think we'll fluctuate too much outside of this.
Yeah, agree. We seem to have come back and tested that reversal candle here, don't we? So, like you say, at the top of that range that we entered in sort of the early summer. So yeah, it's very good reaction so far, and maybe this is the bottom, maybe not in the short term, but I do think, and this is the sort of bigger point that I wanted to make today really, is that I do think we are going to continue our trajectory to the upside over the next few months. And if it's all right with you, Theo, I thought I'd just go through a few of the charts that sort of back up my thesis on that.
Yeah, there is something actually before you move on next. I wanted to look at something with you as well. Can you go back out to that 3-day chart where you had there's an earlier moment there back in August, September, much lower, where you've got 2 white dots, far left-hand bottom corner of the screen, effectively.
Okay.
That area to me looks so much like an analog of where we are now.
Yeah.
I think that what we're witnessing here is basically another version of that. If that makes sense.
Yeah, absolutely. So
this is a reaccumulation area.
Yeah. And we sort of had that. It was interesting, wasn't it? Because we had that sort of pop out above 10K, and then we went back down below briefly. And I remember funding was really negative then as well. So it was, as you say, quite comparable with where we're at right now. Funding had gone very negative there. We'd had the fake out pullback, people thinking, oh, 10K the dream is over. And then obviously we just accumulated a little bit more, and then off we went, off to the races to the upside.
Yeah, I think this is a similar reaccumulation channel where you have a secondary lower accumulation take place. Like that area between September to November was, a lot of people were quite bearish. Like, yeah, like you said, oh, it's the market. We couldn't break into the new highs. Like, is it over? And that was like the pivotal moment. That was the very start of the bull market, aside from basically March. But I think this looks like an analog, or a kind of a fractal of that first step. And you see it back in the comparisons of 2017 and the 2013 bull market run up. You have a few big step up SOS and LPS patterns before you get that last bit of fanatic madness.
Yeah, exactly. It's like we're sort of flushing out all the over leveraged people who were trying to get long leverage waiting for that big move up. We're flushing those guys out, flushing out the weak hands who just think we're going to enter a 3-year bear market, and then we move on higher, or at least that's what I'm expecting to potentially happen over the next few months.
Cool. So take us over the charts that you've been looking at.
Yeah, cool. Okay, so I thought I'd start with one of the on-chain charts. So I personally, so there's other analysts out there who like to look at on-chain data to try and get a steer on what's going to happen in the near term, sort of like the next couple of weeks. I personally tend to not do that. I think it's quite dangerous to do that because the derivatives market is so strong still with Bitcoin. So when I look at on-chain stuff, it tends to be more macro, and I find that is more useful for me personally. And a lot of the charts on the sites on Looking to Bitcoin Decent Trader will be more macro led for that reason. So this one really, this is a chart that I think is useful to highlight one of the reasons why I don't think we are ready for a bear market yet, and why I think actually we are still reasonably early, or at the sort of midpoint of the bull run, in fact. And this is called the 1-year hodl wave chart. And this looks at, so there's 2 components on this chart. The first is that it looks at the percentage of all Bitcoin that have ever been mined. So you can see this scale here, 0 to 100. The percentage of all Bitcoin in existence that has not moved on chain for at least a year. So it's been sat in wallets for over a year. And that is the orange line you can see here. And so what this is telling us, so this is a version of hodl waves, which people might have heard of before, but this is just looking at one part of that, the 1 year plus wave, if you like. And what this is showing us is that at the moment, 54% of all Bitcoin in existence has not moved on chain from one wallet to another wallet for at least a year. And that's important because it can give us a clue as to where we are in Bitcoin's cycles. So what tends to happen? So you can see the other line here, the white line is price. I'm sure you recognize that. And what tends to happen is in a bear market, Bitcoin OGs who know what they're doing, they understand the market, they start accumulating their Bitcoin at low prices. And so I'm using the last cycle as an example here. And so prices are low, and you can see this inverse relationship with the 1 year hodl line. The amount of hodling is very high because these OGs are waiting for higher prices, and they keep hodling until price starts to go up. And as price goes up, then they can realize their profits. And in realizing their profits, they have to sell their Bitcoin. So it moves from one wallet to another wallet. And that's why you start to see this 1 year hodl line drift down. And until we reach the sort of peak of the cycles. And you can see that happened in the cycle before, although it was a bit messier because Bitcoin was younger back then. But what tends to happen, and I've highlighted here on this chart, the red dots highlight the cycle top and where the hodl line was at the time, and the green highlights the bottom of the cycles. And what we can see at the moment is that actually we are not really down far enough in terms of the hodl line. So people or hodlers are hodling, waiting for these higher prices, and they're not selling, and they haven't been selling through all of this volatility that we've had the past few months. You can see that line's been flat. And then I don't think they are going to sell until, Bitcoin probably starts heading towards 100K and beyond. And I think that's when you're going to start to see this orange line start to move down. So for me, this is a pretty strong signal that long-term hodlers are not moving their coins yet. And that has the effect of restricting supply. So restricted supply, as we know, when demand increases, that's going to put an upward pressure on the price.
Yeah, just volatility in general. I think that, that's one of the interesting parts is you remove the open supply from the market, the volatility increases in both directions. So there's upward volatility if there's buying pressure, but even the slightest increase in then selling pressure, there's equal opportunity for the same amount of volatility.
Yeah, absolutely.
It's
And
just a
we've seen all that
precarious market.
volatility this past sort of 6 months, haven't we?
Yes, yes, because there's limited buy and sell pressure on the open markets. So you see it constructively in the price. This kind of reminds me of the way we're looking at the not the what's that? What's the one called? Oh, Jesus, what's the pretty standard? We've been following it for a bunch of years. What's it? I'm so lost on the name right now. It's the amount of
Are
hold
you talking about live charts or on-chain data
hold
or
on, yeah, and on-chain data. I'm just such a massive brain fart.
is it?
It's got it in my favorites here. Okay, so it was the stock to flow is the standard one, but it's the stock to flow deflection model that this kind of reminds me of. That there's some of this
Yeah.
the hodl wave seems. I mean, a large owner and creator of Bitcoin itself are the miners, and their kind of business model seems to revolve around these cycle highs and lows as well.
Yeah.
Nice. This is great. Great. Another nice fundamental for we're probably because it feels like we're low in price. If you look at the stock to flow deflection, it's like, well, Bitcoin is actually very underpriced right now.
Yeah, absolutely. In fact, I was looking at that just earlier. Let's have a quick look at that now. Let's get that up whilst you're talking about it. And I think you're talking about, let's give this a chance to load up. You're talking about this down here at the bottom, right? So this is the stock to flow chart. Let me just zoom in a little bit. And you're talking about this deflection here. And you are, yeah, exactly to your point, we are below, price is well below that stock to flow line currently.
Yeah, that's what it was. That's what it reminded me of, was that minor relationship to the production.
Yeah, and it wouldn't surprise me. In fact, this went back in July was about, it reminded me, and I talked about this at the time, the pullbacks we had here in the 2017 cycle when we pulled back really far, and the divergence was about the same. And we've since had like we had back then, we've had a very, very strong reaction off it, and prices accelerated back towards that stock to flow line, which at the moment is around $80,000. And judging by previous cycles, if we do get this parabolic run, then it would take us beyond that level.
Yeah, I think we're probably limited. If we look at the deflection model too, notice how the deflection time in the red is getting lower. I think it's the increase in more, let's say, wealthy investors, because they're not interested in just buying and selling an asset. If they want an asset, they know they want it for a long time.
Absolutely.
So, I think we're seeing that decrease in volatility and the time that it takes to get to the median price as well, because they're much more patient in getting there. Like, no, it's fine. We'll get there.
Exactly. And you know what? This asset is getting so big now. It just takes a lot of money coming into the system to push the price up, right? So it's not like the old days where Bitcoin was trading between, $10 and $100, and you were getting these mad divergences, because it was a lot easier to push the price around back then than it is these days.
Yes, with even more limited the amount of Bitcoin on the market, because there was only so many mined in those early days. It was like, in itself, the circulating supply was so small.
Exactly. So that's looking particularly favorable for Bitcoin right now. And something else that I think is related, and also an important point to note, is to consider the amount of Bitcoin being held on exchanges. So this gives us a bit of an idea in terms of like shorter term supply. So we just talked about the longer term supply with the 1 year hodlers, or people who have kept Bitcoin in their wallet for over a year. This is looking at the amount of Bitcoin held on exchanges today. And what we can see, so we've got price is the gray line, and the amount of Bitcoin held on exchanges is the orange line. And pretty much since the COVID crash, we've just seen this continual draining of Bitcoin held on exchanges. And a big reason for that, it's not the only reason, but a big reason is because people are anticipating, future higher prices. So they want to take it off the exchange to put into cold storage, right? And so we've just seen this huge trend decline until we had obviously the crash in the summer, and then we had this spike up, painted this lovely Bart shaped pattern, and then back down we go to new all-time lows. So again, I wouldn't read too much into the short-term movements and bumps on this data. I think what's more useful is to look at the longer-term trend, and the longer-term trend is still down here. Now, at some point, I think when Bitcoin does go parabolic, or if it goes parabolic, then we will see people putting their coins onto exchange to sell, as those long-term hodlers want to cash in, but we're not at that level.
Well, and you can see too that increase in volatility, regardless of direction. Like if you zoom in closer to the last, let's say 2 months, and you just give a bit of a more of a minutia view, see that last little tick up, the supply coming onto the market and its effect on the price is like dramatic.
Yeah, absolutely.
As soon as you start to decrease it, like no matter which way the market, if supply comes onto the market, it's dramatic. If the supply leaves the market, it's like usually a little dramatic. But yeah, I agree with you that this is one of the ones we like as well, which is that the increase in the next volatility cycle too is still ahead of us, which means that when people go into FOMO mode, Bitcoin goes above 58 grand, that increase of volatility to the upside becomes almost parabolic and straight up.
Yeah, I think so, and I think I agree with you as well on the broad level as well. I think once we enter this sort of 55 to 60K level, I think that's just, gives a lot of people who are perhaps on the fence at the moment a lot of encouragement that we're probably not going to enter a sustained bear market, and actually, the bull market's still in play. And then when we break all-time highs, I just think it's going to be, FOMO time. And that's really when you could see some strong acceleration. So looking at another one of the live charts, the 200-week moving average heat map. So the 200-week moving average is, historically throughout Bitcoin's adoption process that we've gone through the past 10 or 11 or so years, it's acted as pretty good support. So this orange line here is the 200-week moving average, tends to catch pretty well the bottoms of Bitcoin cycles. And this live chart just looks at how fast price is accelerating, and therefore how fast the 200-week moving average is accelerating. And you can see I create this heat map here. So when it gets a percentage monthly increase of above sort of 12, 13, 14, 15%, it starts to get increasingly red. And this is really telling us, when is FOMO entering the market? When are you seeing outside participants come in and think that Bitcoin is, the next big thing they've got to jump onto because they've missed the boat? It tends to be, in these last final stages. And even though we got fairly overheated in the sort of Q2 this year, we didn't really get that same public FOMO that we've had previously. And I still think that there is opportunity to see that this cycle, when I look at what's happening with, money printing around the world and all that sort of stuff. I mean, I saw your short video yesterday, Tia, and I thought it was absolutely spot on about Evergrande and the sort of fallout from that. And I think that sort of thing could be what drives a FOMO market cycle where we see this indicator turning red.
Yeah, and there's almost at large too a bigger interest in non-heavy assets. A lot of the younger like people like me, I don't like being too tied down. It's nice to be very, very mobile with stuff. So I think that there's a big push for more, like, let's say, light assets, like an asset that you can walk around the world with, and if you need to.
Absolutely, and none of the I've never thought about it as being a heavy asset, but yeah, it's a good way of describing it. But it's not only heavy in terms of, like you say, the you can't transport it around, but even just the paperwork involved in the process and the bureaucracy involved in, like, say, buying a property compared to buying some Bitcoin. I agree with you. I think a younger generation finds it more attractive to get into something like crypto.
Yeah, yeah, absolutely. And the general push for an easier adoption. The UI and the UX has developed so much. The first time I bought Bitcoin, it was so obscure. It was so obscure. Whereas now it's easily. I mean, not. I don't. People probably attribute it, oh, regulation. I think it's just the user experience for any tech evolution gets better and better. And TikTok is a great example of the algorithm that they use on that thing. Just feeds content to people. It is so good at getting you to stay on their platform. It is crazy.
I'm almost too scared to go on it because I've heard so many people say that. I'm like, I'm just scared I'm going to turn into like a TikTok zombie.
There are a few pauses. One of the ways they've been able to do it is because a lot of the content is so creative. You see a lot more stylized comedy or magic or dancing, whereas Instagram, I think, was quite superficial. TikTok does have a lot of creative people doing something more than just posting a photo or like a video of their weekend. So I do think that it engaged with the part of the younger generation went on this about like people just showing off nice cars and buildings. Like a lot of the stuff that does really well there is about dancing or comedy or something. So
is crypto sort of quite involved on TikTok or not really? Like, do you see exchanges on there?
Well, no, I think you can definitely see a lot of growth in the ecosystem itself, though. Anyways, right? If their algorithm will push any type of content that people find relevant, and it'll push it to a large audience. Whereas YouTube doesn't really do that anymore. You almost have to get lucky. Like if luck prevails in your favor, you can have one of those videos. But TikTok is actively trying to create that virility for people on through their algorithm. They've taken a really interesting approach. But yes, crypto does well there too. I think more the point there though was that UI and the UX development from the Instagram into the TikTok, because YouTube has copied that, Instagram has copied that, Facebook has started to do these stories. So what I was trying to highlight is that part of this is the ease of adoption, the volatility for liquidity in the markets, the fact that you can have a company buy and or sell $1 billion into the market. It's advanced so much in terms of a monetary layer. Now, I really don't think we don't need like it's doing a perfect tractor job. And I don't think a lot of people grasp how large of a fundamental that is. Like like, oh, it's not cheap enough to send a coffee. It's like, have you ever tried to send $100,000 across a border?
Exactly right. Exactly. Totally agree. It really feels like you say, it's come on light years since the last cycle in terms of usability and access, ease of access. Even just to buy some Bitcoin, I remember it used to be challenging, and it's so much easier now. Like you can recommend it to your mom or something, or like a family member, and they can even do it. So much easier now.
Yeah, so I definitely think that we're seeing the same kind of fundamentals, which we're in the first impulse wave of maybe a secondary, or we maybe get one more impulse wave out of this bull market.
Yeah, I think so. And again, going back on chain here. So this is looking at a different indicator on chain. This is looking at the difference between market cap and realized cap. So this is called MVRV Z score. So market value and realized value. And market value is simply the market cap of Bitcoin, right? So the market price times the number of Bitcoins in circulation, and that's the white line here. And then we've got realized value, or realized cap, which looks at the average price of Bitcoin ever paid. So it looks at the without getting into the technicals of it too much, the price of Bitcoins when they were last moved from one wallet to another wallet, and then average all of that up. And what it does is it gives you a historical average price of Bitcoin rather than today's current market price. And it is a very useful tool because it can highlight when are some great opportunities to buy Bitcoin. And you can see whenever the short-term market price dips below realized price, the orange line, historically those have been some great buy the dip opportunities. You can see it's the depths.
Yeah, lately I just tell people every day is a good day. New moon, full moon, waning moon, waxing moon. Just you should be accumulating assets. This
I agree with that. I agree with that for
this
sure.
idea, yeah, this idea of trading or investing is trading dollars for assets, and trading is trading assets for dollars. When we know they're just on a massive inflationary game, it's like, oh, well, get rid of these dollars as quickly as possible because assets are the only thing here that's worth anything, right?
Exactly right. Like just search for the hard assets and hold on to them whilst all this insane money printing is going on.
So this MRV is kind of like the NVT as well. Then I see similarities here.
Kind of, yeah, it's similar. But what is useful on this one in particular is it's very effective at picking out cycle highs. It tells us when the market is getting very overheated, because the market value or the market cap is too far extended away from realized cap, which is the sort of average historical price of Bitcoin, the orange line. And when it does, this Z score is like a standard deviation, which shows the extremes between the two. And it spikes up into this red zone up here. So historically, when the blue indicator has spiked into the red zone, it has picked out the previous cycle highs to within a week or so. And what you can see is right now at the moment, and the inverse is true, right? So when we're in the depths of the bear market, this indicator, the blue indicator, goes down into the green zone, saying this is the ultimate sort of macro scale by the dip opportunity. You see the last time it did was in the March COVID crash. And right now we are miles away from that top. So we can have some major acceleration over the next few months before we get overextended. So I do think there's still plenty of fuel left to burn in terms of where we go this cycle. And I just share a chart from Phil B. So the guy who I work on Decent Trader with, he tweeted this out the other day. And so Phil B is a brilliant technical trader, far superior trader than me. But he also does macro views as well. And he uses some of my tools and stuff to do that. And here he's using the log growth curve and also something called the golden ratio multiplier, which is another tool that picks out cycle highs. And his viewpoint on what might happen over the next few months, I kind of broadly agree with. And what he's saying here is that actually, this correction is perfectly fine. And we're still on this parabolic move up. And actually, once, to your point earlier on, Tio, once we start getting above the previous all-time high, that's when things could really get crazy, and we could get a parabolic run up. And if we do, sort of around the top of this log growth curve and a bit higher is possible, which would be, anywhere between 150, 200K. So that's kind of the area he's looking at. And I have to say, I'm broadly in line with that in terms of potential zone of target.
Yeah, I thought that for some reason, I feel that this will be a less exaggerated bull market than we had in 2017. I think they're going to manage the top better with their buying and their selling. I think that what we're witnessing right now is, in fact, a better management of that top to some degree. So I feel that if we go over 150, I'm going to be super surprised. That's my personal sentiment. And look, fuck yes, like right. Anything if it like that up in that area to me, I think is going to be so unsustainable for price and market function, unless again these big players just do not care and will drive the price up even higher. Because again, with the measurement of kind of the asset speculation here is really going to be through demand. So we don't know what happens when that demand goes into these unique areas of FOMO with these big investors, especially with what's out there on the in the rest of the conversation.
It is interesting because so one of the tools I just mentioned, the golden ratio multiplier. The purpose of that tool is throughout Bitcoin's adoption curve, it's picked out the cycle tops. But I do think we are coming to the end of that adoption phase now. And the indicator actually says when price reaches this red band here, so you can see previously it tapped if we go way back. So it hits these Fibonacci multiples each time. So you can see back here, 2013, it tapped the yellow, which was the 21 multiple, and then the orange, which was the 13, and then the blue, which was one down. And then there's a full explanation on the website. But I'm not going to go through it now, but what it's saying is that actually we are approaching the end now of Bitcoin's adoption phase. And it may be that the top of this cycle is when we hit the red band, which is currently at around 75k, but is trending up. So it might be around 100k by the time price catches up with it. My computer's just having a bit of a meltdown because I think we're live streaming, but you can see here now, this red line here should be where we technically top out next. But then what comes after that? I suppose the question is, do we just enter a new market phase where we go parabolic, which is what Phil B's suggesting, or do we then pull back from there, which, you know, could be pulling back from around 90, 100K?
Yeah, it's a big, we've got a lot of random stuff on the world plate right now.
Yes.
A lot of swans and horses riding around. Yeah, it's gonna be really interesting to see where a top comes out in this. Part of my mental register is trying to calculate the smarter, or not smarter, maybe it's not the nice way to say it, but the significantly more liquid investor, people that have single individuals that have billions of dollars, because they could drastically change the market dynamic here through their accumulation process. And because it wouldn't be just one of them, there'd be multiple people or multiple institutions across the board. And I think we're seeing that. So part of the measurement is, okay, well, we've seen Michael Saylor only buy, and we effectively know just accumulation at any price is a smart way to go. But where do they start leaning into, we should be diversifying from this ridiculous high in any way, shape, or form, to test the market at the very least, to see what it can handle. You know, I think a lot of these big firms, they're going to be trying to push that market down as low as it can go every step of the way to accumulate as much as possible. So I think if we get to 130, 140, that's the top in my mind. That's where. Anyways, that's where I think we hit. If Phil B's right here and we go to 2, if we keep going higher, we could have a madness moment where it just goes up, like we're basically raising the whole floor of this market cycle. But I think for some reason we get stuck between like $1.45 and then 65 for another year or two as kind of an accumulation cycle, and then you see a longer ride to 200 and something.
Interesting. Okay. Yeah. So, I mean, I do agree with you that the bigger players are having much bigger sway on this market these days. And I think you can see it in the difference in price action to previous cycles. I think it will depend somewhat on how crazy things get in the world. And if things get crazy, then it may be that there is a rush to assets like Bitcoin, which could send things higher. But I do agree with you as well. I think we have to account for these larger players now. And that's kind of why I personally am not going to try and give an exact number on where we top out this cycle. And we'll certainly be taking profits as we go, because I think what I do have a lot of confidence in, and I think you're in agreement here, is that there is sufficient evidence to suggest that we could trend significantly higher because of what we're seeing on chain. But yeah, exactly where that top is, we'll have to see, because it will be going crazy time. Like when we're above 100K, the euphoria will be kicking in, but that's when the big players will be also paying attention as to whether they should be selling some of their Bitcoin.
Yeah, this is going to be, I think, a really telling cycle for how the next 5 to 10 years of Bitcoin's growth goes.
Yeah,
because largely we'd want it as a money to stable out somewhat.
Yeah,
and that's why my sentiment is like, okay, if we hit 140, we come back down to 60, and we spend 2 to 3 years ranging between $1.40 to 60. And make a new reaccumulation channel which is we're still into new all-time highs. Then the next cycle, that's how I kind of see that next cycle going to 200. Because if we go parabolic now up to 200, it'll be so short-lived. Yeah, you'll have like a week up there at most, a few days. It'll be madness.
Yeah. I think it would be short-lived. I think if we go up parabolic style like we did in 2017, yeah, exactly. You're talking a couple of weeks and then into a significant pullback for a good while, for months.
Yes.
So yes, so that's kind of my view, Theo. That's kind of where I think we are heading next, and some of the reasons why I do think we are in bullish accumulation, and I think there's lots of evidence to suggest, particularly the on-chain data, that long-term hodlers are not interested in selling at these prices, and that is going to put a bit of pressure on the price in the next few months.
Yeah, I think we're seeing the same picture, which is all, you never want to look for confirmation bias, but we didn't speak before, and we agree now. So
exactly, and yeah, I mean, I think what I would say that I suppose is potentially a different viewpoint to yours is that I do think there is a reasonable probability we could make our way up to 200k plus if some external event makes people FOMO in. But
damn, that would be fucking awesome, Philip. I hope you're right then.
Well, I'm not. The thing is, as I'm saying, like I certainly am not suggesting. I'm not giving any financial advice to anyone anyway. But I certainly do not think it would be wise to try and catch the absolute top of that. And I will be taking profits along the way, regardless as to whether we ever make it up to that high number or not.
Yes. Well, this is one of the reasons why I've been really trying to drive home this core thesis of accumulation. That if we just take the base function that we know they're destroying the value of the dollar, assets are worth more than paper, that you should always be trading paper for assets effectively, because the paper is a goddamn hot potato. And the longer you hold on to it, the more you're going to get burned for holding on to that potato. Yeah. And here, what's so fun about the tech side is, well, you get asymmetric growth because of the scalability of digital technology. From an investment standpoint, you get something highly fascinating and libertarian. So you attract a lot of really niche mind thinkers that kind of built it in the first place. And then now this potential of global adoption, I don't even want to say the words, but I saw El Salvador was giving out home treatment kits and Bitcoin. I'm like, I love this country now. I'm like, this is so crazy to see the dichotomy or the schism in, like, let's say value information, or communicating value across not just chain, but government to people, or people to government effectively. So we're in such a really unique time for how this stuff grows. I'm gonna be fascinated to see. Before we jump off, you have any other, we invested in some video games recently, and I've been playing around more with like abstractions in my for entertainment, and, because people play a lot of video games. So
yeah,
what's anything come across your table you find interesting that you didn't think you would find interesting the last year?
So I think that I'm a fan of Unisocks. So I don't know if you know, as in Uniswap, they have a kind of digital collectible, which is called Unisocks. And I really like the concept of it as a digital collectible. And it is it sounds quite strange, right? Because you can, you buy the token and you can redeem a physical pair of Unisocks that get sent to you, and the token gets burnt. And there's only 500 of these. And right, yeah. I just think it's the reason why I like it. I know it sounds crazy, but it is because it captures a moment in time. And so it is the first sort of DeFi digital collectible. And it is the first, I guess, crossover of like digital scarcity fashion brand, because it's like this kind of socks brand. Yeah. I've kind of explained it in a really bad way, but check it out, and I think it's a very interesting experiment.
Yes, One of the other things that I adapted in my thesis this last year, since we had a chat in November, was experimentation. Did you ever I talk about a book called Dan Dow frequently? Have you heard this book?
No, no.
There's a quote in it that I absolutely love, Philip. It goes, "Heads I win, tails I only lose a little." And I think a lot of investors, they hold back from making investments because they think they need to make a really big investment for it to pay off,
Yeah.
instead of like, hey, how about I just only lose a little here and chalk my lessons up as like some of the most valuable parts of investing at first. And like the NFT sector, even though it's ridiculous to go in spend $100 on gas fees on Ethereum, right? I don't suggest anyone do it, but this experimentation, this playing with the ecosystem, whether it's a sock NFT, like I bought a devil, some robots, some can own a bunch of random NFTs, but the fun part, the experimentation, knowing that, hey, there's only limited downside. Like, what did the socks cost you?
Well,
like $8,000 now is an $80,000 pair of socks.
But they are trading around that level at the moment. They're
at 80 grand.
Yeah, let me just check the current prices. Let's go.
The NFT market is just madness. Wait, so the socks are trading or the NFTs are trading at that?
Well, they are kind of one and the same. Hang on. Let me see. Socks. You were right on the money. $80,000. You're absolutely bang on the money there. I did not thankfully pay that amount, but that's what they're trading at right now. So anyway, I'm not here to show my NFTs. But
no, don't. It's that experimentation.
I
think exactly. The question was the random things we did. We wouldn't have and not only was it random, we would not expect to do it, but it actually paid off.
Yeah, exactly. And you know what? I got to say, I got to say, absolutely bang on the money there. Oh, I've got some feedback. So I did. Whoops. What I got to say is, last time we spoke, Theo, you talked about Sol, and I ignored it. And then I think I dread to think what Sol was when you mentioned it to me last time. It was probably like $5.
Yeah, it was like $3 to $7. Yeah, Avalanche was only at like $5 still.
And now it's gone absolutely crazy. And to your point around, I agree with you that people think, oh, I've missed the boat already, or therefore, if I go in on something, I've got to go really big. I've got to go all in. And I think something like Sol is a really good example of your point there, that actually you didn't have to go in really big on Sol. You just have to have the will to experiment and the conviction to hold it.
Yes.
And now look at it. It's gone great guns. So yeah, I think that point is a really important point in crypto. And we are still early. And if you really have conviction on something, it can really, really pay off.
Play around, fuck around with shit. Why not have some? Like, it's interesting like that. I think people get caught up in you see it in the maximalism, almost like a religious culture around the hodl, because that's how they've managed to survive holding an asset, I guess, to some degree. Like, they have to like support each other with memes and shit. Basically maximalism is like a self-help group for people that are just want to hold one asset only or some shit. It's like you've built a religious cult around it effectively. Anyways, the point of this, like the Link Marines or whatever, like they've got little cults and factions. Anyways, the point of this is that experimentation process, that ability to buy something like a pair of NFT socks is so hyper valuable. I think a lot of people overstep that. And whether it's an investment or playing with the technology, those little steps, and that little step consistently over time is what pays off. So that you're like, oh, to buy like $50 of Sol every month last year, it was actually quite rewarding. Or however much you can spend. And we start with low numbers. Everybody can afford $50 a month, right? You better be able to. But it's always a pleasure to chat. Philip, it's been great today. Thanks for jumping on and sharing some of these fundamentals with me. I don't really like to listen to other people. Cathie Wood is literally the only person I listen to in terms of like what's going on in the market.
That's a good choice. She seems super smart, doesn't she? So yeah, very good choice. I've
Yeah.
actually got one question for you, Tio, before
Yes.
we go. Given that I foolishly ignored your Sol Solana discussions last time, is there anything on your horizon that I should perhaps pay a bit more attention to this time?
Um, okay. So the new one for me was the video game sector.
Right.
NFTs, the metaverse, and the video game sector. I don't think people recognize how big that's going to be. I did not recognize how big the sheer volume behind the video game sector. It's bigger than the movie industry. I think it's bigger than the TV, film, and music industry all combined, or some shit. So it is a monster, and it's think about like this. FTX, when their first like signature of people was an esports team, and then they bought the stadium. They didn't buy the stadium first, and then the esports team. They bought the esports team first.
Right.
That the digital gaming sector is a behemoth of a market, and what we saw with Axes, Splinterlands, this kind of play to earn where you're rewarded for network participation. I see the gameplay like mining. Like the players are effectively going through the algorithms to hash out tokens and to hash out new weapons and new stuff from the video game effectively.
Yeah.
I think the video game sector is going to be huge. So that was a new one for me that I didn't see coming. And it's worked out well for us to add it to our thesis, just in small occasions. But just in general, I think Avalanche and Solana, I'm not 100% convinced in any way that Ethereum just doesn't become an NFT platform in the future. Solana and Avalanche have easily technical capabilities that would leave Ethereum in the dust, where I almost look at Ethereum like it's a Honda race car, and they just keep adding, just like added a turbo, they added an intercooler, they're adding fins, whereas both Solana and Avalanche were trying to build better cars from the get-go. Even
Right.
Cardano kind of had that in its sights. Like I think even Charles uses that analogy, like let's build a car with seatbelts instead of seatbelts. Avalanche and Solana were like, how do we build this thing to be as fast as possible and as secure as possible?
Yeah.
And I think that there is validity to the proof of stake mechanism, even though there's downsides. There's still downsides to what we're doing with proof of work. So Avalanche and Solana are the two leaders. I actually think Avalanche has a better run at it, if you want to ask my intuition on that process. But both of them are more capable of scaling something like a blockchain video game. So if you need a video game where you're giving NFT, like characters are trading this anyways, I think you need a much faster platform than Ethereum could ever offer. And the video game sector being hundreds of billions of dollars, I think there's a clear relationship of the kind of value transfer of the participation and the growth of the video game and those much faster blockchains that can support it, even if it's not financial, because there's so much finance in that video game itself. You got people spending hundreds of hours playing these games.
Yeah.
Anyway, so that was kind of the new thesis, was the video game sector. But I still stand by Solana and Avalanche. I think it's so early in there. It's like but the last time we were talking, I think Avalanche was between $5 and $12, and I was hyper bullish on that too, because I don't know anything about tech, but when I get a few indicators like the leads of technology like Solana and Avalanche, like, okay, well, this could be a clear winner just based off the technology. So I'm primarily layer one solution. There's room for that. I think Bitcoin is already the money. I think it'll remain the money for decades. But what we use to build the financial infrastructure around our money, I don't think we've decided yet. I think there's a lot of room for like the Web 3.0 to interact with the money layer, if that makes sense.
Yeah, totally. Great. Okay.
Video games.
Video games.
Short answer it. Yeah.
I'll pay more attention this time. Thanks.
Yeah, we'll keep chatting. It's great to touch base with you. Glad things are well. Thanks for dropping in and sharing with us. I like hearing other people's views. We're going to try to do more podcasts in general. I always have fun doing it. So
brilliant. Well, thanks for having me on. It's great. Pleasure as always. And just really enjoy bouncing ideas off you. It's great.
You as well. Awesome. Well, Bear Family, give us a thumbs up if you enjoyed today's chat. You can follow all of Philip Swift and Looking at Bitcoin's links down below. Leave a comment or a question if you'd like to reach out. And yeah, we'll see you guys again on the next episode. Philip, we'll do this again when I think we're close, when we both think we're closer to the end.
Good idea. Sounds good. Thanks, Theo.
Awesome. Have a great day. Awesome.